What's happening, guys? Sheldon the Sniper here. Now, I know one of the big problems with crypto is you open up your chart and it's very overwhelming, very difficult, and you don't know where to start. And that's why you are watching this video. In this video, I'm going to be showing you how to open up a chart and how to see where is the next trade and what tools do you use to see should I be buying or should I be selling. Now, I'm going to show you the good examples and the bad examples when something doesn't go to plan. And if you want to join the cohort, click the sign up link below and come join me in class. Now hit that like, hit that subscribe button and enjoy the video. So opening up your chart, looking at the coin now, what do you see? What do you do? Which one's first? Which one's best? Which one's this? So the first one here, just remember, timeframes don't matter, guys. Timeframes don't matter. Same pattern splat on all timeframes. The emotion repeats itself on 5 minutes, 1 minute, 1 week. All these different things. The only thing that's separated is the range, the percentages of what the tokens move in, and secondly, the time, how long it takes to execute a trade or anything like that. That's the only main differences, but the same patterns all the time that play out. And that's why it's so good. It's about getting used to the patterns, getting used to the flow of things, because I can literally jump on at any moment now and I can see if I need to take a trade or not. So for example, if I look at any of these ones over here, I can already see if it's a long, if it's a short. Firstly here, I'll look in and I'll say, okay, AVAX at the moment, I look at this token and what do I see first? I basically see what direction is the token moving. That's the big thing on whatever time frame. So I've decided to randomly use the 8 hour and what direction are we currently moving in? And what it's basically showing is right now we're basically forming a bull leg at the moment. So basically something that looks like this, something like this, and basically should bounce. I'm seeing a bullish leg over here, ultimately looking then at a smaller pullback, and I want to be longing that area over there. So what it means at the moment, looking for a long right now doesn't make too much sense because it's already had the bullish push to the upside. And ultimately, if I wanted to buy the long, I know it's going to be on this pullback in the specific area somewhere over here, which will work out now. So what does that mean? It means basically, if I put on the RSI, nearly at the bottom, there's still 5 hours. So this is actually good that it does show RSI at the bottom because now I can explain. Okay, so ultimately that's where I want to be long. So if I'm looking at this position now, I'd probably say there's a long not available at the moment just yet. I would like to get it a bit cheaper, but maybe there is a short. Okay, so if I look at this little trend over here, I can see that we're basically starting to form this little upwards wedge over here. And ultimately, I know when we lose this little trend over here, we should be making our way down to this area of where I can get my buy. Now, what the big thing is, we obviously have the RSI that's now sitting down to the floor, which means one of two things. It means either it's going to try have another pump first to the upside. Remember, you don't want to buy this right now because your downside risk is too much. Because let me show you an example of if this is the top right now. Okay, let's say this is the temporary top. And we're going to have a pullback, and then after that, we'll bounce. Remember, in order to do that, you need the 4-step method. What's the first step? The step is to take the Fibonacci from the bottom to the top, just to give you an area of where is golden zone. Okay, there we go. We can see there's the 618. Secondly, you want to see in horizontal. So if you go to the left over here, you can see there's a whole bunch of horizontal support that's sitting. So it's giving a good area that if the pullback starts right now, this is more or less where that area is going to start. Okay, the third thing is you want to RSI at the bottom. Now the difference over here is the RSI is at the bottom still inside of the trend, which means two things. Either price is going to accelerate any moment now very quickly because RSIs tend to move, the market tends to move when the RSIs are very overbought or oversold. So either that's going to happen or this high is not in just yet. So if you look over here, this high is not in just yet. It means possibly another push to the upside. And then from that, we can start to make our way to the downside. So it's basically teaching you that this trade right now, if you wanted to long or short, there's no current trade right now just yet to actually be taking on this specific time frame at the moment, because you don't have the area of where to be buying it. You don't have the RSI working, it's at the bottom, but we haven't broken trend to the downside. So ultimately for me, it's this needs to have a better structure when it comes to a trade. Now I want to show you another example. This is why we use different tokens. Let me use this one as the next example. Okay, so you just saw me show this one and it's like, okay, it's not offering me the best, it's not the sexiest chart right now. This is why you have multiple coins. So remember, why I do this is I always categorize that if it's a certain business that I need a token to move 10%, I will find 3 tokens that give me that 10%. So that's why I like
Cardano, Solana, and AVAX, because they all more or less move the same percentages. So when you actually open a chart, you want to find a chart that is sexy. Sorry for my thing, but you want to find it that it makes sense. This one over here is like, if I enter here, maybe I can put a stop here. But if the pullback happens and this happens, it doesn't make sense. So now I go to MATIC and I'm like, okay, whoa, this one looks a little bit different.
Come here, guys, come here. So what I want to show you is all of this is inside of 𝗙𝗍𝗆 School. I show you the 4-step methods. I even show you on the short, medium, and long time frame strategies that you can use this method. And then what I do is I show you each tool one by one so you can understand each one. Then you bring it all together and all of a sudden you start looking at the chart and it's no longer confusing. Guys, spots are running out. Come join cohort 7. Sign up on the link below. I'll let you get back to your video.
Because if I look at this one now at the moment, I see the same thing, an impulse. So if I take my Fibonacci from here to here, I see 618. It's already hit it. Secondly, if I show over here, there's the horizontal. It's already hit it. Thirdly, RSI at the bottom. So remember, same time frames, just different tokens, but one's starting to make a lot more sense because we've hit 618. We've already hit the horizontal. RSI was reset. What's my fourth one? When do I confirm I want to buy? Boom. Break of trend. So now all of a sudden I'm like, okay, I had the two different versions. One wasn't showing me exactly the way I want to see it, and the second one was. So for me, this one on the 8 hour, this is a trade. This is a trade over here. I would, in the beginning, have my stop loss below this bigger piece over here, because if we broke that trend now, we should not come back in. And then as soon as I get past this high over here, I want to move my stop loss. Because what it basically means is if we come up, I want to know if we come just short, I know we can come retest. So I don't want my stop loss too close, otherwise I get stopped out. But if this comes up and it starts to break, that should turn into a floor, and that's what should exactly happen over there. So I'm not afraid that once we get that higher high, so remember, the first thing you want to do, guys, is when you are tracking a coin to the downside, what does it mean? If your trend is going down like this, what does it mean? It means lower highs and lower lows. That's exactly what it's doing. All of a sudden, when it breaks that trend, what are you trying to see? Trying to see higher high, higher low. And that's where this pattern is where you'll see this pattern many times. What pattern is this one? Left shoulder, head, right shoulder. The most obvious time you're going to see this pattern play out is when you break out of the trend. Because what you'll basically see is you'll see over here, I see a left shoulder, I see here, all of a sudden, same high, or slightly lower, right shoulder, breakout. That's usually what you'll see in a retest. If we go straight away from here and we just break out, that's called the RS flip. And that basically means if we break higher there, we should retest that as support and move our way up. So the moment you start getting above these areas here, you want to take your stop loss now and you can move it up just below that low. You always want to reduce risk, okay? Now, what's the last thing you do as well when you want to enter this trade? Is you want to get a little bit of an understanding of where this trade can go. So for example, if I'm going to put my stop loss under that low over there, and let me make it a little bit bigger so you guys can see. There we go. That's more or less, this yellow line over here is more or less where my stop loss will be. So if I take my long tool and I put my long tool over there, at the moment, and I put it there, you're running at around a 4 to 5%. Okay, now let's go look, where would my TP be? Now, what you want to do is you want to zoom out. Remember, you're taking the data here to get whatever position you want to the upside. You can see it's a bullish flag. Cool. Now what you want to do is you want to see the left side over here. Where realistically, where is my data of where this could possibly go? So you want to take, so remember, you're always going to make your charts a little bit messy in the beginning, and then you're going to clean it up. Very important to come to your conclusion. But you want to take the nearest high. Let me just make this a different line over here. Let's make it green. Okay. And then after that, again, you want to then go mark the next ones. You have this resistance over here, and then you have this resistance over here. Now, in order to get a TP, you want the exact same thing, very similar to what you did to get the buy. You want at least 2 or 3 things ticking the box that where you're going to get there. So now what you've done is you've marked out the horizontals, but you want to see, okay, where's another indicator that's going to give me that understanding? And I know one very well, Fibonacci. Take Fibonacci from here to here, and it will give you, so take it from here to there, boom. That gives me 618 right over there. So as things stand, if I look at it, I have a horizontal and I have 618, and it's giving me an area of where this current move now should make its way up to on the next push to the upside. Now I look at my risk to reward and I can see to that resistance over there, it's just above a 1, 2, 3. So it's an okay trade. It's good, but it's not crazy. The more you can get, if you can get 4 to 5, that's better. But 3 is your minimum. So this is a valuable, a valid trade. The only thing is you can see a 1, 2, 3. The way that you better that ratio is to better your risk. So as soon as, if you know you're entering this trade, you know you want to minimize this as much as you can, because look, as soon as I minimize it, look what my reward starts becoming. All of a sudden, if I remove my stop loss all the way to there, all of a sudden my risk to reward is 1 to 20. So it just shows you the power of where you put your stop losses and the risk of taking your trade, because look how it just plays with that risk to reward meter. Now remember, what a risk to reward ratio there is to do is to keep you consistent with your trades, to make sure that every time you take a trade, you're always in the habit of minimal risk and higher gains. And it's just going to always keep you double checking that every time to be like, should I enter this trade or not? Now, this may seem amazing, but I actually want to show you guys the same thing with MATIC. And I want to show you here quickly. Let me just see over here, and let's go to the weekly. This is quite interesting because as things stand over here, if I look at this trade and I say, okay, let's look at the possible levels. This is the weekly now. So remember, same patterns. It's all the same. So let's go look. What's the current move at the moment? From here to here. Let's go see where it is on the Fibonacci. Okay, golden zone at the moment. Amazing. Is there any horizontals? Let's see if there's any horizontals over here. There's a horizontal over the 786. Okay, amazing. Is RSI down at the bottom? RSI is down at the bottom. Okay, cool. That's the buy. And what's the last one that you need? You need the trend line. So remember, guys, if your coin is not showing you a good trade, like an understandable trade, you don't trade that coin because it's not showing you exactly. We just saw it now with AVAX, but then we go to MATIC and MATIC looks way better, way more structured, way more understanding. Don't marry the coin. No one cares what the coin is. Just find a few, 2 or 3 of them that match the percentage that you need for your business. Okay. So looking at this, this is pretty good. Where would I put my stop loss? In this area over here. Okay. So if I look at this now, this is quite crazy. Where could this go to the upside? Let's go take my nearest point over here and let's go take this whole wave and go see from here all the way down to the bottom. Gives me this area and it gives me these horizontals on the left, giving me a zone of where they can get to. Now, just before I show you the bad example, I just want to show you how you calculate this on every single trade that you take. Okay, let me just see over here. Where would my entry be now? It would be there. So my risk would literally be 52%. Crazy. It sounds crazy, but when it comes to your higher timeframes, you're going to get used to the way bigger range. But then we look at reward and you are looking at a 200% reward. So even though you're still willing to risk 50% of your capital, it's still a risk to reward ratio of 1 to 3. That's crazy. Okay. But you see what I do, guys? I get my 4-step method to show me where to buy. And then I take a 2 or 3-step method to see where is the probabilities of where this trade can go and how many indicators are showing me where that can go. And remember, this comes with the RSI, all these sort of things too. But what I want to show you as well is, let's say that this now comes down. Okay, let's say now this, let me just get this decides to come down over here like this and starts to bounce and you're looking at longing. Okay, now the problem over here is, firstly, you won't see a Fibonacci or anything like that. But let's say you did want to enter this trade over here. Where's my nearest support after this over here on the left? Is here. Where is my nearest major resistance points over here? Okay, so you start to look at this and you're like, okay, cool. So there's my entry. Amazing. Now I put in this 87% to the downside. And I look at that more or less. How am I calculating that? Is I'm taking the fib from the top to bottom. Where's the 618? You can see I can already calculate more or less where it will be. And you can see my risk to reward ratio of 1 to 6. Now, guys, so for me, when it comes to weekly with MATIC at the moment, yes, it's maybe okay where it is now, but for me, it's incredibly risky to take this trade. Even BNB. If I go to BNB right now and I look at this and I'm like, okay, this is my possible downside. just as an example, versus my upside, even if it goes back to all-time high. So it's basically looking at a token and be like, what happens if this had to go to that support? And what happens if this had to go to all-time high from now? Is it worth me dollar costing here? And you can see that you're literally looking at 80% and you're looking at 180% to the upside. So this is a terrible trade. This is not a trade. So I would not be buying BNB as a long-term hold right now, just yet, unless I am putting stop losses on my trade right below over there. Then all of a sudden you're looking at a 1 to 12. Okay, a cool possibility. And this could maybe end up being a 2-year hold. So the whole thing about it is no one cares. It's not about what is the best tool to be using in order to take a trade. It's more about understanding the pattern and understanding, does this current trade, like if I look at this coin right now, will I know how to trade it? And that's the big thing. And it's about having all 4 of them match up. So you want your Fibonacci in the right place, plus a horizontal, plus a trend line, plus a RSI. If you can make a count of that or start to see it, like look at this on BNB, doesn't make much sense. So for me at the moment, I'm not super interested in trading this. That's why I think like MATIC at the moment makes a lot more sense, because I can at least see the pattern. I can at least calculate that it did bounce in the right area. I can see right now that it is breaking trend. And ultimately, you just want to make sure that 4 steps are covered in order to take the trade. So here, guys, if you want a 1x trade, here's the first trade for you. Take it and see how it goes.
Haha, you thought I was going to give you the trade. You have to join the class, guys. Remember, I'm here to give you trades, but I want to teach you all the skills that you get to make your own trades. We have Cohort 7 starting in the next 3 weeks. Come join me in class. There are basic steps below. Click the sign up button. It will show you what you need to do. Bring that energy, bring the computer, and let's create a journey together. I'll see you all in class.